40inbox.com here. So we're going to be checking out this article called Six Money Secrets of Self-Made Millionaires. So plenty of people aren't born into wealth. They got there by making smart money choices. So there are 21,951,000 millionaires in the United States according to the 2021 Global Wealth Report. And it's a pretty safe bet that not all of them were born rich. In fact, the number of millionaires increased substantially between 2020 and 2021, largely due to housing price increases and stock market gains, and not to mention crypto. Not all these millionaires are showing off their wealth. Some live below or well below their means, as they say rich people didn't get rich by giving away their money. And neither should you. If you want to join the 1% club someday, make smarter choices now. And here are a few things self-made millionaires do that you can start doing today. Number one, they add $1.7 million to their retirement and someone else does the work. So managing your own investment takes a lot of time and involves a fair amount of potential risk. But do you really want to be doing it? According to a recent Vanguard study, a self-managed $500,000 investment would turn into $1.69 million after 25 years. But the same amount managed by a qualified financial advisor turns into $3.4 million. That's $1.7 million more. But here's the thing, right? I mean, you could also just stick these things into like the S&P 500 or like index funds, and you're probably going to do pretty well as well. So if you've been considering working with an advisor, a free matching service called Smart Asset will connect you, blah, 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 blah. Okay. Don't have a true picture of your financial future? No problem, blah, 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 blah. Okay, so this is just like an affiliate link, okay. Number two, they protect their wealth with precious metals. As you may have noticed lately, a single bad day on the street can send your stocks far, far south. A string of such days can send you into the fetal position. Wondering where all your money went? Market corrections are another reminder to diversify, diversify, diversify. This is where American Hartford Gold comes in. Now this is again like another affiliate link, right? And here's the thing, you could buy physical gold and all that kind of stuff, right? But like the reality, gold's really only good to like keeping your purchasing power healthier than just keeping it in cash. I mean, that's pretty much it. So number three, they earn 23% investing in commercial real estate. That's right, people who invested in commercial real estate through Fundrise earned an average annual return of 22.9% in 2021. There's a lot of affiliate links in here, by the way. Of course, past performance is no guarantee of future results, but still pretty impressive, huh? Here's what's even more impressive. You don't need to be a gazillionaire to get in on the action. So the company lets you become a landlord without actually having to be a landlord. It's like buying stocks. You own a piece of the company, or in this case, a piece of a bunch of buildings. Personally, I'd rather just invest into like a REIT, like a real estate investment trust. So real estate has long been an investment favorite. After all, people will always need a place to live, and according to a new study from Harvard's Joint Center for Housing Studies, rents in professionally managed apartment buildings were up 16.8% year over year by the fourth quarter of 2021. To sum things up, you'll be buying real estate without having to be a landlord. You'll be diversifying your portfolio and reducing the risk that comes from putting everything into stocks, bonds, or mutual funds. And you can get started with as little as $10. Number four, they steered clear of credit card debt. Not all credit card debt is the result of careless behavior. Plenty of smart, hardworking people end up maxing out the plastic due to illness, divorce, or job loss, or more than one of those things. Fact is, sometimes debt is inescapable. Well, I'd have to disagree with that, but sometimes people get put into a really bad situation, and that's the easiest way out. So you can throw every dime you have at it and still see the balance grow, or you can do something about it. National debt relief can help. Depending on your situation, you might choose debt consolidation or debt relief. I would not try the debt relief because you're going to pay a crazy fee for it. I would be interested in doing debt consolidation only if they're able to lower the interest rate or basically give you no interest rate at all for a set period of time. So debt consolidation puts all your debt into one loan through national debt relief with a single monthly payment. Whether you can qualify depends on your credit score. Debt relief means that the company will negotiate what you owe, the creditor agrees to forgive the balance, which is known as a settlement, and on average, the national debt relief will get 50% of your debt written off. Again, the problem with these debt relief companies, I'm not saying that they're doing this, but typically when a company does this, they basically purposely put you in default if you were not even there in the first place. Meaning, like, if you're current, they're probably going to get you to not pay your bills, completely destroying your credit score so that you could end up negotiating, because a creditor is not going to be willing to negotiate with you if you're paying your bills. So typically it takes 24 to 48 months to pay off a settlement, although it could be faster. Compare that with a maxed out card though. If you're able to make only the minimum payments, it might take 10 to 20 years to finish paying it off. Imagine how much interest you'd pay during that time frame, and imagine what that money could have done for you someplace else. Boom, 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 boom. Number 5, they diversify in artwork, outperforming the S&P 500 by 180%. Not all millionaires put their dollars into blue chip stocks. Some also invest in blue chip art, and has been on a run. Between 2000 and 2018, returns from this investment category outperformed the S&P 500 by 180%. Back in the day, fine art investing was the province of those who could afford to draw millions at exclusive auctions, but now a company called Masterworks lets you get a piece of the action for as little as $20 plus fees. And here's the thing, right? Don't get involved in art if you can't actually buy the artwork and store it. To me, it just makes almost no sense. So these investment masterpieces are from renowned artists such as Warhol, Basquiat, Calder, and Banksy. Masterworks researches the most consistently valuable artworks to buy, then holds them for 3 to 10 years, and after auction, Masterworks shares the profit with investors. Sometimes the returns are even faster. For example, Banksy's Mona Lisa was released to investors in October 2019 and sold in October 2020, providing a 32% net annualized return. It's a truly unique way to increase your net worth. While there's no guarantee you'll win big, here's an investment that allows you to appreciate the beauty and history behind these artworks. You're not just an investor, you're part of the global art market for as little as $20. I mean, I guess it'd be kind of fun to do if you had the excess cash, but it'd be pretty difficult to get rich going this route unless you go more of the NFT route, because you might just get lucky buying some random JPEG and basically making $1 million off of a sale of that. Number 6, they invest for the long term. So you weren't born rich, join the club. For many of us, prosperity is a simple formula. Investing plus time equals wealth. Millionaires, whether born or self-made, know this. Putting all your cash into a savings account is only a little more profitable than burying it in fruit jars in the backyard. If you want to make money, you're going to have to take risk. In other words, you have to invest. So feel free to give your thoughts on this. If you want to learn how to get a debt and master your money, go to 40inbox.com.